Hello and welcome to our channel. Today we're diving deep into a topic that's crucial for many of us over 50. How to strategize for early retirement, especially if you're in a physically demanding job and looking to ease your workload. We'll explore financial strategies that can help you retire early, or at least make life a bit more comfortable. This comprehensive guide will cover everything from assessing your current financial situation to creating passive income streams and maximizing your retirement accounts. Let's start with the foundation of any solid retirement plan, assessing your current financial situation. This step is crucial because you can't plan for where you want to go without knowing where you are. Calculate your net worth by listing all your assets and subtracting your liabilities. This includes your home equity, savings accounts, investment portfolios, and any other valuable assets you own, minus any debts or outstanding loans. Next, review your income and expenses in detail. Track every dollar coming in and going out for at least a month to get a clear picture of your spending habits. This exercise often reveals surprising areas where you might be overspending, as well as opportunities to save more. High-interest debt, like credit card balances, can be a significant drain on your resources. Prioritize paying off these debts as quickly as possible to free up more money for savings and investments. Once you have a clear picture of your financial standing, it's time to look at your current retirement savings. Review your 401k, IRA, and any other retirement accounts you have. Understanding your starting point is crucial for planning your path forward and determining how much more you need to save to reach your early retirement goals. Now that we've laid the groundwork, let's talk about one of the most powerful tools available to those of us over 50, catch-up contributions to retirement accounts. If you're 50 or older, you can take advantage of these additional contribution allowances to supercharge your retirement savings. For 401ks, you can contribute an extra $6,500 annually on top of the standard limit. This means that in 2023, if you're over 50, you can contribute up to $30,000 to your 401k instead of the standard $22,500 limit. The same principle applies to individual retirement accounts, IRAs. If you're 50 or older, you can add an extra $1,000 per year to your IRA contributions. This brings your total allowable contribution to $7,500 for 23, compared to the standard $6,500 limit for those under 50. These catch-up contributions can significantly boost your retirement savings, especially if you start taking advantage of them as soon as you're eligible. For those in physically demanding jobs, considering a phased retirement can be a game changer. This approach involves gradually reducing your work hours or transitioning to less physically taxing roles within your field. By doing so, you can continue earning income, which allows you to delay dipping into your retirement savings. This extra time for your investments to grow can make a substantial difference in your long-term financial security. Moreover, a phased retirement often allows you to maintain health insurance coverage through your employer, which can be a significant cost-saving measure until you're eligible for Medicare. It also provides a smoother psychological transition into full retirement, allowing you to gradually adjust to a different lifestyle and routine. Creating passive income streams is another excellent strategy for easing your transition into retirement. Passive income refers to money earned with minimal ongoing effort, which can provide a steady cash flow without the physical demands of your current job. One popular option is investing in rental properties. While this requires an initial investment and some ongoing management, it can provide a reliable monthly income. Another avenue for passive income is investing in dividend-paying stocks. By building a portfolio of strong, stable companies with a history of consistent dividend payments, you can create a steady income stream that can supplement your retirement savings. If you have expertise in a particular area, consider creating and selling online courses. This could be related to your professional skills or a hobby you're passionate about. Once created, these courses can continue to generate income with minimal additional effort on your part. Similarly, writing and publishing ebooks can provide ongoing royalties. The beauty of digital products is that they can be sold repeatedly without additional production costs. Downsizing and reducing expenses is a powerful strategy that can help you save more now and reduce what you'll need in retirement. Consider moving to a smaller home or a less expensive area. Many retirees find that moving to a smaller home or a different region not only saves money, but also simplifies their lives and reduces maintenance responsibilities. Eliminating unnecessary expenses is another crucial step. Review your monthly bills and subscriptions. Are you paying for services you rarely use? Can you find better deals on your insurance policies? Small savings across multiple areas can add up to significant amounts over time. Paying off high-interest debt should be a priority. The interest saved by eliminating credit card debt, for example, is essentially a guaranteed return on your money. Don't overlook the potential savings from senior discounts. If you're eligible for an HSA, meaning you have a high-deductible health plan, maxing out your contributions can provide triple tax benefits. Contributions are tax-deductible, the money grows tax-free, and withdrawals for qualified medical expenses are also tax-free. After age 65, you can withdraw funds for any reason without penalty, though you'll pay income tax on non-medical withdrawals. This flexibility makes HSAs an excellent additional retirement savings vehicle. Understanding your Social Security options is crucial for optimal retirement planning. You can start claiming benefits as early as age 62, but your monthly benefit will be permanently reduced. The full retirement age is between 66 and 67 for most of us, depending on our birth year. Delaying benefits until age 70 can significantly increase your monthly payment. When deciding when to claim, consider factors like your health, financial needs, and life expectancy. The costs of long-term care can quickly deplete retirement savings if not properly planned for. Look into long-term care insurance policies, which can help cover the costs of nursing home care or in-home health assistance. These policies are generally more affordable if purchased when you're younger and healthier. Some people explore options like continuing care retirement communities, which provide a range of care levels as needs change over time. As you navigate these complex financial decisions, it's often beneficial to consult with professionals. A financial advisor can help you optimize your retirement strategy, taking into account your specific circumstances and goals. They can also help you understand the implications of different investment choices and retirement timing decisions. An estate planning attorney can ensure your assets are protected and will be distributed according to your wishes, which becomes increasingly important as you approach retirement. Remember, retirement planning isn't a one-time event. It's an ongoing process that requires regular review and adjustment. Stay flexible and informed about changes in tax laws, Social Security regulations, and Medicare policies. Be prepared to adapt your strategy as your circumstances change or as new opportunities arise. In conclusion, planning for early retirement, especially when transitioning from physically demanding work, requires careful strategy and preparation. By assessing your current financial situation, maximizing retirement account contributions, considering a phased retirement approach, exploring passive income streams, reducing expenses, leveraging HSAs, understanding Social Security options, planning for long-term care, and seeking professional advice, you can work towards a more comfortable and secure retirement. Remember, it's never too late to start planning and making improvements to your financial situation. Thank you for watching this comprehensive guide on financial strategies for early retirement. If you found this information helpful, please like and subscribe for more content on navigating life and finances after 50. We'd love to hear about your experiences and strategies for retirement planning. Share your thoughts in the comments below, and let's continue this important conversation. Until next time, here's to your financial health and a happy, secure retirement.